What's up? And welcome back to the channel. Quick thing before we dive in. If you're serious about actually building a trading system, hit that like button and subscribe. It takes 2 seconds. It tells YouTube to push this to more traders, and it lets me keep dropping this stuff for free. Done? Perfect. Let's get into it. How to build a millionaire trading system. For years, throughout my trading, I spent an enormous amount of time chasing the magic strategy, the magic indicator, the magic signal. The truth is, over time, I realized that you can have the best tools available. And by the way, if you want the best tools out there, click the first link in the description. But despite all that, I kept failing to string together good days, especially on prop firms. Pass a challenge, lose it right away, start over, hit a payout, blow the account. Always stuck in the same vicious circle. At first, obviously, that's incredibly frustrating for a trader. So what's the instinctive reaction? I look for a new strategy, I look for a new indicator, I look for a new trading methodology. But the system is not your strategy. This is something most people won't tell you. It hurts to say it. But that's exactly why it's the only reasonable choice. To build a trading system, and in a second we'll break down what a trading system actually means, you need something more than a good strategy. So I'm going to walk you through the 4 main points that over time allowed me to build my trading system. Risk management, starting capital and how to scale it, hard rules, and of course the strategy. Because even if a system isn't a strategy, you still need a strategy to trade. So let's start exactly there, with the strategic side. The way I see it, the 4 focal points you have to concentrate on are finding an idea. And by idea, I mean a strategy that maybe already exists, has been tested, has been validated by academic research, has a reason to exist, a real rationale, a hypothesis behind it, then validating it, then implementing your own models, your indicators, your tools into that strategy to try to sharpen its edge. And then moving on to the hardest part, which is execution. So let's assume you're starting completely from zero. How do I build my trading system? Well, these are things I learned over time, but if I had to start over today, I'd tap into academic papers. If you go to the SSRN website, you can basically search for academic papers. For example, if we look into intraday trading and search for strategies, we'll find tons of academic papers there. Now, each of these papers is obviously based on different markets, on different assets, so you'll have to go and find the right trading instrument. If I had to start over tomorrow, what would I go for? I'd go for futures, which are the regulated instruments I'm trading right now. Why would I choose futures? Because they're on a centralized exchange, which is the CME, the Chicago Mercantile Exchange. Talking, of course, about US stock index futures. They're trend follower assets, so they give you a greater chance to exploit trend following and momentum trading, and above all, they're assets you can analyze. You can analyze them very easily from a macro standpoint because there's so much data available, and they give you the opportunity to analyze the real order flow using order flow platforms like the one I use, which in this case is ATAS. So here we're basically going to look for something related to a stock index or possibly even Forex, which personally I've never loved too much. But there are tons of papers. What do I do with a paper? Well, when I found a paper that, at my discretion, looks profitable or at least interesting, looks promising, I can download it directly from this site. And here you can even see the number of downloads. We caught one right away, intraday index predictability and option trading profitability. And here you study the dynamics of S&P 500 futures and option trading, how they're correlated with each other, which, by the way, is something I use myself. These papers are published directly through academic research, but it's often the funds themselves that publish their strategies, once downloaded. And it's completely free to download. You can easily open it right in the browser and access everything that's written in the paper. Now, rather than reading through all these very complex mathematical formulas, you can drop the paper into Claude, into ChatGPT, and ask it to code the strategy for you. You can use a basic platform like TradingView and have it build you a Python script and test the basic logic. What's that for? To validate the idea. So, if this idea, turned into a strategy, actually produces at least some result, so it looks promising, I can go and make the implementations. Now, I really want this to be clear because making implementations sounds very vague. The base, obviously, is studying the world of trading, studying how the financial markets work, studying the order flow. In this case, what the interactions are between buyers and sellers and what the best tools are that actually show you those interactions. If you want to learn them and study them in the most professional way you can find on the market today, I recommend you click the link in the description, because I'll explain it to you directly. On top of giving you my validated models and my proprietary indicators that will help you exactly with the implementation. And that's pretty much what I did. I studied the order flow. I created indicators that can be implemented into tons of strategies to improve the edge. Here we're doing a search for what's called the edge. The edge is the statistical advantage you're looking for in the market. So this whole operation serves to build an edge, a robust edge. One that's based on market efficiency, not on inefficiency. Now, quick context on who's actually telling you all this. I'm David, and if you've seen my videos, you know I don't show my face. And I never will. In this game, a face is the cheapest thing to fake. A smile in front of a rented Lambo is cheap. A timestamped log of 286 trades with the losers left in is expensive, because you can only produce it one way, by actually trading. That's my authority. The tape, not my jawline. I got hooked on the markets at 21. I've been studying this profession for over 12 years and trading real markets for the last 7. And in 2020, I took everything I'd learned and co-founded CP Academy with my partner, Antonio Hereditario. The trading school this entire system comes from. 5 years, over 5,000 students. And through our prop firm partnerships, those students have been funded with more than $6.5 million in real capital. Same models, same indicators, a 5-year paper trail you can go check yourself and see. This is a common belief. Many of the strategies you'll find are based on short-term inefficiencies that then tend to disappear. My strategy, instead, my entire trading system, is based on market efficiency, so that it is, let's say, subject to inefficiencies. But always remember that inefficiencies are bugs of an operating system, and sooner or later they'll be fixed. After you've done all this work and done the validation and implementation part using backtesting, so you test in the past without putting even a single euro into the market, and there are methodologies like the one I just showed you to do it very quickly. Not extremely precise, but a great starting base. From there, you move on to the execution part. Now, here I want to stress a very, very, very important aspect, and I'll underline it in red. Execution is the most complex aspect, because the main problem for traders is not being able to execute their own strategy. This is a gigantic issue that I noticed in my own daily routine, and I've noticed it in so many traders I know, and that I've trained. Execution is complex, and here you have several roads you can take. There are roads that involve automated execution, or you can take a hybrid road. The hybrid road is doing the research work like the one I explained before, but then executing the trade in a discretionary way, but not too discretionary. Be careful. Discretion doesn't help in the markets. So here, it's 90% mechanical, 10% human. This is an aspect I always underline. I execute my trades manually, but I've built a manual execution system that can't be tampered with. And this is a very important point. Your execution must not be tampered with. By whom? By you. That's exactly why hard rules are such a crucial aspect. Most traders focus on execution rules, on how to perfectly execute their strategy, but there are other extremely important aspects too. So everyone will have to set execution rules. What do execution rules mean? Let me give you a practical example. I use a tool, a lot called the volume profile, which lets me visualize the volume profile of the market in a given session. So this tool basically shows me where the largest exchange of volume happened. A valid breakout strategy is to break one of the value areas, so the break can come either to the upside or the downside. And inside here, you've got 70% of the traded volume. So this is where the so-called fair value of the market is built. Many traders enter directly on the break. I, instead, always prefer to wait for a return to the value area before entering, both for long trades and for short trades. For me, this is a hard rule. What does that entail? It entails giving up a lot of trades because sometimes the market, once it's broken, doesn't retest the area anymore. It just takes off. But from my validation tests, I've seen that an entry in here, after this retest, gives me greater confidence, lets me manage a tighter stop loss, and therefore risk less on the single trade and get a higher return. Because if I position on a breakout candle like this one could be, I might already lose all of this move. Whereas by positioning here, this could already be the target of my trade. So for the way I work, which is very scalping oriented, here I reload my position, I add size to my position, obviously to try to make more money out of the single trade. But my entry requires a test of this area. It's a super objective test because the volume profile is a tool that draws these areas for you. You'll see it exactly like this. Obviously, it has to be set up correctly. So exit and come back, and then exit again from this zone. It's objective. That's why it's a hard rule. I never want to trade the breakout on the exit. I always wait for the retest. These are the entry rules. But the main hard rules that I recommend you implement right away into your trading system are how to manage a negative streak of stop losses, and this can only and exclusively be given to you by validation. Because if you've done a correct validation, the validation will give you your stop loss streak from tests done over time. You'll realize your strategy has a streak of maybe 8, 9, 10 stops in a row. Great. If this happens in the present too and not just in the past, you'll be more prepared to face this situation. Then, managing the profit loss, which means the loss of profit, is one of the most important elements. Here, I want to give a quick overview. One of the main problems I had wasn't managing stop losses, because you can set yourself a rule of 3 stop losses out of the market for that day. My main difficulty was when my daily PNL was around $800, and from 800 I'd maybe drop back to plus 700, plus 500. And this is where the trader, especially in a prop firm, burns accounts. When you see your profit growing, you'll try to recover the profit you'd made before, and this will most likely lead you to ruin. In fact, my risk of ruin is measured also based on this parameter. So, how I manage the loss of realized profit during that day. This is an aspect I've noticed impacts the single day a lot, and much less the weekly profits, admittedly, because there's more emotionality involved. In your hard rules, there also has to be the context around you when you trade, your trading station, the noise around you. Don't trade from your phone, because trading from the phone is obviously the first thing that destroys accounts. In fact, most brokers make it impossible to trade from the phone app. Guys, do not trade from your phone. Trade in your study, in your office, in your room, and exclusively within defined time windows. In short, the whole context you create around yourself has to be regulated efficiently so that you can't make mistakes that aren't due to your strategy. Always remember, if over 1,000 trades you had a sample of 250 stop losses, and you take 50 extra stops that year that don't depend on the strategy but depend on the context around you, you're negatively hacking your own data. This aspect, which everyone underestimates at the start, is a really, really important one. Now let's move on to how to have correct management of risk, but based above all on what your capital is. Because while in backtesting you can afford the luxury of risking $2,000 billion per trade, here you can't. At this stage, you'll have to respect what your capital actually is. And I want to make an important clarification. If you want to live off trading, you'll need your own personal account. It's not possible to live off trading with prop firms, because prop firms were engineered not to let you live off trading. But prop firms at the start give you that little bit of capital you need to get going. A prop firm, for those who don't know, though I imagine we all know here, is a company that provides traders with simulated accounts, where whoever shows discipline, and above all respects their rules, can go and extract payouts. So, withdraw profits, which can then obviously be invested for the personal account, which is what I've always done. So as a starting point, if I had to start over tomorrow to build my trading system, I'd start exactly from prop firms, because right now the costs are very low. Obviously, it's not the same thing, so the management rules will have to be calibrated exactly on prop firms. They have to be properly built for prop firms. So your account rule depends on the drawdown. If your prop firm offers you a total drawdown of $2,000, you obviously can't go and risk $1,000 per trade. So everything depends on the starting capital. If you don't have your own starting capital, prop firms can obviously be a great way to start accumulating capital. How do you scale? On prop firms, there's the possibility to manage multiple accounts, even linked together. So basically, today, through certain functions. For example, on my platform, there's a function called Following Manager that lets me link several accounts together. But there are tons of apps that do it now. So if I had a total of 3 accounts, say 50,000 cap each, making a daily profit by executing the same operation of $200 on one account, well, this would obviously multiply by 3 because I've got 3 accounts available. So this lets me scale much, much faster on prop firms, and above all, stay on them for as little time as possible. Because prop firms will then serve us to create our own personal account for whoever wants to do that. Of course, it's certainly not an obligation. But as I told you before, whoever wants to live off trading has to start managing real money on regulated brokers. This is absolutely non-negotiable. So, risk management rules calibrated on the account you have available. Daily rules that are also part of the hard rules. So always start from the account. This is the 3-level system that personally helped me a lot. Always start from general account rules, then daily rules, and then rules for single trades. So basically, if I had a $2,000 account with a take profit of $3,000, so the classic prop firm configuration, 3,000 of profit and 2,000 of loss, I go and calculate my account rules. I generally want to pass the challenge within the trading week when I've decided to do a new prop firm. So from here, it comes naturally to figure out what the daily profit should be. I get around $700. And obviously, having this hard rule, I never exceed $500 of daily loss, because that way, over the week, I can still survive 4 losing days in a row before losing the prop firm. So from the account rules come the daily rules, which then lead me to my trade rules. Because if I've got $500 of stop, I'll maybe risk $150 per operation. So I have 3 stop losses available in a single day. And all of this is told to us by validation. So with 3 stops of $50, I just need to take 2 profits to get to 600, which is very close to my target. These are all the initial systems that I recommend for building a trading system that over time can then be scaled to make it millionaire. Because when you're managing little, you have the chance to do all the tests. Prop firms are excellent to begin with, to learn how to trade, to learn a bit how to manage capital under emotionality, and above all, they give you a bit of that feeling of being on the real market. So they're definitely better than trading on a classic demo, where obviously the emotionality just isn't there. If you're interested in understanding and learning from me how to build your trading system, I'll leave the link in the description below.